Good evening, viewers. Welcome again for another video discussion. Today, I'm going to take you through break-even analysis, which I was discussing in the past. Today, I'm taking another level or another version of the discussion, which we will continue with the multi-product break-even analysis. Now, we have discussed multi-product break-even analysis, which we have taken up one example. I'm going to use the same example to talk a different method in calculating the break-even analysis. Now, this is the question over here. PL produces and sells two products, M and N. Product M sells at $7 per unit and has a total variable cost of 2.94, and while product N sells for 15 per unit and has a total variable cost of 4.40. The marketing department has estimated that for every 5 units of M sold, 1 unit of N will be sold. The organization's fixed cost per period total 123,600. Let's jot down this information. We have two products, M and N. The question has given us the selling price and the variable cost. The selling price for each product will be 7 and 15. The variable cost was given to us 2.94 and 4.40. 2.94 and 4.40. As a result, we can calculate the contribution of each product. Let me open the calculator here. So 7 minus 2.94. 7 minus 2.94, 4.06. And 15 minus 4.4. 4.4. That gives me 10.6. This is the first step in any usual marginal costing or break-even question. The very first step is to calculate contribution. The question also given us the proportions, the proportion of the units when we are selling these two products together. Every time I'm selling, let me check the question. Every time I'm selling 5 units of M, I will be selling 1 unit of N. So 5 units of M and 1 unit of N. So now let me calculate the total contribution for each proportion. So what I have to do is I need to multiply 4.06 into 5, which I am getting 20.3. And 10.6 into 1, which again 10.6. So the total of these two will be 20.30 plus 10.60, that is 30.90. And also I can calculate the total revenue of this proportion. What you mean by this, you have to multiply selling price by the proportion. So M, I will multiply 5 times 7, that gives me 35, and N, I'm getting 15 times 1, that is 15. So therefore, total I'm getting 50. So I can write it down here, 50. Now, let's calculate the CS ratio, multi-product CS ratio. How I calculate that? I'll take the total contribution of the mix, mix divide by total revenue of the mix. Then how I get that? Total contribution we have arrived 30.90. And the total revenue we have arrived 50. So if you multiply this, if you simplify this or solve this, 30.90 divided by 50 into 100. You get 61.8. Either 0.618 or 61.8%. Then what you do, you then have to find out the fixed cost of the company. The fixed cost of the company is, as per the question, you can clearly note 123,600. Then we calculate break even point per mix. So that is 123,600 divided by 0.618. If you do that, you will get let's find out 123,600 divided by 0.618. We are getting a total revenue of 200,000. $200,000 as the break even revenue. Now we then have to find out the break even quantities. We have to find out the break even quantities. In finding that, what we do is we take the break even revenue and we divide this by the revenue of the total mix. Revenue of mix. So we have 200,000, that divide by 50, that we get 200,000 divided by 50. I'm getting 4,000 mixes. Now we need to find out the number of M and number of N. We know that each single mix we are producing 5 units of M and 1 unit of N. So M will be 4,000 into 5, 20,000 units. N will be 4,000 into 1, 4,000 units. So now we can then find out the revenue in dollars of M, that is 20,000 into the selling price. Selling price given $7. So that 20,000 into 7 into 7, I'm having 140,000. and N in dollars, 20,000, no, it's not 20 actually, 4,000 into 15. So which I am getting into 15, 6,000. So this gives a clear picture of this example. Just to recap, I have given a situation where a company producing two products, product M and N, and the selling price and the variable cost of these two products have been given, and the mix in single mix, how many units of M and how many units of N also given. Accordingly, we have calculated the contribution per unit, and then we worked out the total contribution of the mix. As well, we have worked out the total revenue of the mix. Now here I have calculated the break-even revenue. The break-even revenue I have calculated using a method called CS ratio. Alternatively, I can also do a calculation over here. If you follow this at this point, alternatively, I can do a different calculation. Just follow this. Now I need the break-even mix quantity. That we take the fixed cost of the company and then divide this by the combined contribution. The combined contribution which we have calculated here, that is 30.9. Therefore, 123,600 divided by 30.9. Let me check what is the answer of that. 123,600 divided by 30.90, I am having 4,000. So you can calculate the break-even quantity from using CS ratio basis or using combined contribution basis. Thank you for watching, and wait for the next continuation of the break-even point analysis very soon. Do subscribe, share and like my YouTube channel for similar videos of this nature. Thanks a lot.